Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show going into this Memorial Day weekend with this man, Dmitry Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance.
All right.
Here's the disclaimer.
Just before we get started, remember, everyone, this is a 3-day weekend coming up. So no show on Monday. We will be back next Tuesday, hopefully.
Yep. And in addition to that, if you guys are joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live or in direct, you could. We provide a link to Zoom on that live chat on YouTube. Click on that. Once you get into Zoom, just click on raise your hand. It'll be on the bottom of the screen. Once we let you in, you could ask your question live and direct. If you prefer to type your question in, you could type that question on the live chat on YouTube. Will's watching it. He'll read it back to me. So while we're waiting for more people to join us and questions to come in, what we'll do is start out taking a look at the pre-market report, and these are stocks trading pre-market hours. Excuse me. See if we could get some insights from that. Then we'll move on to any questions that come in. If we don't get questions coming in, I'm going to kind of continue on the conversations we've been having this week with other questions regarding, risk management and trades. So let's start with the pre-market report. And these are stocks trading in pre-market hours. I'm going to come down here. I guess before we come all the way down to the list, just to take a look at the market breadth. This is what's going on today, May 26th in the pre-market hours. We do see that we are tracking that there are 495 stocks trading in pre-market hours that are up from yesterday's close. 202 are down. As far as volume of shares, there are 84.3 million shares traded in a pre-market hours that are on up volume versus 31.3 million down volume. And another metric we're looking at is the dollar volume in the shares. So if we took the volume, converted it to how much in dollar terms traded, $2.2 billion worth of shares trading up in a pre-market versus 350 million down. So here it looks like a big bullish bias at the open, big lean. Yesterday, of course, that was a much bigger one, 10 billion versus 2 billion. But we've still got like a half hour to go. And that usually starts to increase as we get closer to 9:30. But right now, from this perspective, looks like we are setting up for bullish bias at the open. Let me come down here. And here we have a list of stocks. We have 3 of them. One is the most active stocks in a pre-market. We also have the biggest percentage gainers and biggest percentage decliners. And if we come down here, I do see 71 stocks made our percentage gainers list, 20 on the decliners. So from this perspective, also confirming a bullish bias at the open. But if we take a look at this list, you will see that there are small cap stocks in there. We have ETFs in there, leverage products, closed-end funds, anything that is listed on a major U.S. exchange. If it's trading in pre-market hours and it meets our thresholds, volume and movement, then it could make this list. So we want to narrow down to a smaller group of stocks. And to do that, we could use the filters here above. Use any of these filters but I'm going to use this one in ETF. And when you click on it, you get a drop down menu, and this allows you to select one of these ETFs. When you do, the list below will get filtered by stocks that are holdings in that ETF. The top ones, these are broad-based ETFs. We got sector ETFs. Let's go with SPY. Clicking on that. Now the list below got filtered by stocks that are holdings in SPY, which are the S&P 500 constituents. You could do that also if you have watch lists. If you guys say watch lists, you could drop it down and select one of your watch lists. Here we see 11 stocks in the S&P 500 made our percentage gainers list, 1 on the decliners. So this is showing, a bullish bias at the open as well. So I guess at this point, I'll take any questions if you have them, Will. If not, maybe I'll just continue on our conversation from previous days.
No questions yet.
All right. I think we did go one, Rob. I think someone in the morning, he did ask about a landing page we used to have, and it was showing really credit put spread ideas, because a lot of people, like to trade credit put spread. That was one of the most requested strategies out there, were credit put spreads. So instead of just having just like a stationary list, when we created these alerts, the idea was that you could filter out these trade ideas and get alerted to. So if you were going to just look at, for example, ideas for bullish, these are call spreads. Let me see, calendar, bullish put spreads. Right now we don't have any because this market isn't open, so the system doesn't know yet where the new prices are, where the new stocks are. So it's waiting at this point for markets to open before it starts to analyze the markets and scan for ideas. But during the day, you could just filter that specific bullish put spreads, and they'll come in the list here. And then if you click on it, you'll be able to read it more about it once you click on those.
You could also do a screener, right?
You could also do a screener. Yeah, if you're just interested in bullish put spreads, you could go from here. And once you go into here, this is our bull put spread screener. If you're in here, you can use the filters above. You could use it and save your own filters, and then come back and download them. And then you'll have those ideas in here. Or you could use one of our preset filters, and this will scan out ideas based on the criteria that you see highlighted above. Right. So here's one in Apple. It's a January 23rd put spread, selling the 170, buying the 165 put. And you could see here, there's a theory.
And then you can, by clicking up top, you could screen by Theo Edge if you want, or win rate or whatever.
Exactly. And right. So these are just preset ones, but then you could start changing them around if you wanted to. But these would be, those top ideas in here. So it's really, really quickly, you could just go in there and get them. So you could see Apple, Microsoft, Google, Meta. It's finding the best ones based on the criteria up top, right? So when we talk about best by what? It's best by the criteria we set. So for example, here in Apple, it's looking at the 165, 170 put June 23rd. Based on our analysis, the market price is $1.22. We have it theoretically worth 63 cents. So if you're selling it above, you're getting a theoretical edge. Historically, when we did an analysis on it in similar situations, it was a winner 87.5% of the time. And here you could see this is your max loss. This is your downside cushion. In other words, right now, Apple's 172.96. Well, as long as Apple just stays here, it has a less than a month to go. So if it stays here, goes higher, or it stays above 170, right, you're going to keep this credit. So even if it goes down from here, from 173, it could still go down, a little bit below 170 by $1.22 for you to break even. But if it goes to 171, you still keep this. It goes higher, you keep it. And if it really blows through, drops below 165, you got to buy back at $5. So your loss is 378. But you got a 2.4% cushion if it goes in the direction against you, right? If it goes down. What if you hold it for a month and everything looks great, right? The stock is here, goes higher, stays above 170. What is your return, right? How much are you expected to get a return on your risk? So if you're risking 378, right, how much return am I getting on my risk? Well, in 1 month, if everything goes well, right, your return's $1.22, you keep it, you risk 378. So it's a 32% return in really less than a month at this point, right? By June 23rd. Here you see that little C, that's telling us that we picked up that there is going to be an event. You can see here June 5th that will cover this expiration. In other words, June 5th is going to come before expiration. You want to know about events because obviously that could potentially be a catalyst for a stock move. We don't know which way, but you have to be aware of it because whatever that event, people are paying attention to it. There are going to be reporters there. There are going to be investors there. There are going to be users there. Afterwards, they're going to be tweeting about it, whatever it is. But that event could potentially create a firm-specific move. You want to be aware of that when you're getting into risk. But that's a quick way to go and find these credit put spreads. I mean, really, you see, I just went to the screen and selected pre-filtered ones. If you have your own requirements, you can use these filters here and save them. And then when you come back, just select the ones you saved. I mean, there are videos in here. Did a lot of videos on these, how to use this put spread screener. All right. Any other questions? Hopefully that was answered.
Yeah, no, that's good.
Okay. So I guess what I'll do is, there's some questions that over time kind of are repeat from new customers. So, and one of the questions sometimes I get is, Dimitri, just pull up a screen of your brokerage and let me see you trade. Like, sitting there and watching. I want to watch you trade live, right? And the reason your people think they're asking these questions because when you get into trading here, I'm going to put it here. When you're getting into trading, if you're new to it, especially if you're new, this is your view of trading. You have a screen in front of you. So let's say this is you. I have to show you why you're asking this question and why you're asking the wrong question. So this is you. And then you have a screen in front of you and you have a bunch of, symbols, and these symbols, you got, symbols in front of you.
Then by symbols, you mean the stock
symbols. Yeah, like stock symbols. Right. Let me do that.
A lot of blinking numbers.
Stock symbols, right? You have, real-time prices, let's say, that are blinking around, and then you'll have charts. Okay. And then you'll have order entries, right? So then you'll have, order entry system. And now, so you got this far, and then you're like, I see everything in front of me. The only thing is, how do I make this work to be successful, right? So I got all this here in front of me, and in your mind, right? So in your mind, you have everything in front of you to be successful. You just don't know how to make it work. How do I make it work? Like, bring up the same, bring up a terminal, bring up a trading terminal, right? I want to see you bring up a trading terminal, and I want to see you make this work. I want to make it profitable so I could copy and do the same thing. Okay. And the reason you're asking this is because all your assumptions about what trading is limited to your previous knowledge, previous experience, and what you see in front of you. Okay. So you got to remember that right now you have all these assumptions, and it's very limited to what you have seen, right? You don't know what you haven't seen. So you're asking the wrong questions, and you could only form assumptions on what you've seen. All right. So to me, this terminal is not going to make you successful, because this terminal, all it is a gateway to the markets. That's it. It's a gateway for you to enter orders into the markets. It doesn't actually have enough for you to be successful, and it can't. One terminal can't. So there's no way that they could create this for you to be a successful trader. You could be successful at entering a trade and executing, but this is an execution system. And execution systems were designed to execute your trades. That's it, right? They might have some data in there and some research, and you might ask, okay, but Dimitri, I see all the data in front of me. I see all these prices. I see all the prices and all the charts. I have all the data, right? So make it work. I want to see you do it. And for me, I barely look at the terminal, okay? Because these prices, raw prices, do not mean anything to me. I cannot make it work, and I'll explain to you why. Because raw prices, right, are just inputs into a model that you need to use to explain something to you, right? And to do that, you need data analysis and explanations that are away from this terminal. Okay. And I'll explain to you, when we look at execution systems, the execution systems are only 1% of what you should be doing. And let's say you take we have a lot of customers for doctors, there were lawyers, but you could ask a doctor, well, I want to learn how to do brain surgery, so I'm going to stand by you during brain surgery and watch you do it. Well, they're not going to be successful at it, because you can't just stand there and go out there and then perform brain surgery on someone, because it was everything, all the preparation, all the education, all the experience that led up to that moment, right? And you're not going to get that just from watching it. Just like a lawyer, when you're a lawyer, yeah, you could step in the courtroom and anybody could go sit there and sit on a courtroom case or read transcripts, but what did all the preparation ahead of time, before you even stepped in there, that's what you need to figure. That's the entire thing. Okay. It's the education and experience and the preparation. So when we look at raw prices, right? Let me explain this to you. These raw prices mean Nothing. These are raw prices that are there to incentivize people to take action, right? These are incentivized to get you to take some emotional action to enter in a trade. And then this trade goes into the markets where professional intermediaries will trade against it. All right. That's what's happening. So before they even hit the market, it's hitting other professional intermediaries that have models, and they're going to decide if they want to trade against it or not, because they know these are uninformed trades. So what are raw prices? Let me see. I took a snapshot here. Here's a roulette table, right? This roulette table contains all the prices, and I see them all in front of me. All this data is in front of me, right? There's no missing numbers there. All the available data is in front of me. 1, 2, 3, 4, 5, up to 36, right? I have all this stuff, and then there's a roulette table, and I have to figure out, and if I don't know any better, I think the way to win this game is I have to figure out what the number is going to come out, right? That's it. It's easy. Like everybody, you have to figure out what the number comes out. And, but you're not going to be successful, right? Every game, they come in there and they can't beat the casino. So then let's say you even go to the casino operator. He's probably a millionaire or a billionaire, right? And you tell him, let me see you make that work. I want to see you, you're millionaire, billionaire. Let me see you be successful at this. And he won't be able to, right? Because that's not how it is set up, right? That it's not set up for anybody looking at this to be successful. It doesn't matter who you put in front of it. You could take the richest person who is you could go to Win Casinos and ask the Win, let me see you're a billion. Let me see you beat this. Well, it's not set up for you to beat it, right? That's the thing. And when you're looking at the raw numbers, you don't even see that. It's only when you start converting the raw numbers to something meaningful, right, that you start getting it. So I'll give you an example. You guys ever go to when you go to like Subway or somewhere, and all these things, they look delicious, and you're like, oh wow, these are so good, I don't know which one to get. But then near it, they started putting the calories. And then when you start looking at the calories of it, you start thinking about it differently. Ooh, you know what? That one has 1,500 calories. It looks good, but that's not really good for me. And, I got invited to a wedding next month. I want to look good in my suit. Summer's
Right,
coming
you're making
up.
me feel bad for the pizza I had last night.
But when you put that next to it, you start thinking about it differently. So when we look at these numbers, to me, this means I cannot tell you how to beat this game, right? Because to me, I got to go do an analysis. And with these numbers, to me, I take them away. These numbers are all the same to me. I don't know. Raw stock numbers mean nothing to me. I have no idea. Even if I could be looking at a chart, I could be looking at, whatever, they mean nothing to. I got to convert them to something, right? I have to convert them to something meaningful that are actionable. So I'm going to take these away because it means nothing, right? Stock prices, all this, it really, once you start really trading, you understand that it's not really meaningful. Let's say I take these away and I convert them to something. All these boxes, I'm going to convert it to something more meaningful. And what I'm going to do is figure out, okay, what are these games? How many potential numbers are on this wheel, right? What is the odd of any of these boxes? What are the odds of it landing there? What are the payoffs? What is so let's say I came up with something different, said, well, for every, sorry guys, look, for every $5 I bet, right, on any of these boxes, what is my expected return? Am I expected to make money, lose money, break even? What is my expected return? And if all of a sudden these boxes are like this, well, for every every $5 you bet in long term, your expected return is minus $1. I'm just making these up right now. Minus, $1. What's going on here? Minus $1, minus $1. What's going on? Right? All these boxes, all of a sudden, I converted to this view. Let me do this. Copy. Let's just say, these were all minus $1 all of a sudden. How many people do you think would start betting at that point? Right? When I took the numbers away and converted it to something where these are your expected returns in the long term. If you keep playing this game, you're just, all these boxes are the same. They're always, the expected value is minus $1. Right? All of a sudden, everything changed, right? You're looking at it from a different perspective, a different angle. And that's why turning on a terminal with raw numbers flashing in front of your eyes, there is no way to make it that I don't even look at that. That terminal is just my gateway to enter the trades after I've done all my preparation, my research, my analysis, my inferences, my models. It's all the way at the end, right? That's it. It's only my gateway to the markets. Because unless you're your own broker dealer, if you're your own broker dealer and you have direct access, you could just enter it in. Otherwise, you got to go through a broker, and they give you some useful information. For sure, there's useful information there, and it's useful from the sense that, yeah, I need a broker to access the markets and clear my trades and, hold my positions and, do all that stuff for me. So of course it has a big use, but I can't look at it, sit there and look at it and become successful because it does not contain enough information for me to do that. So I guess that we're right up at 9:30. Hopefully, that helps answer that question where people think, well, just let me
And
see.
this is in response to a
again.
question I didn't pick up on. It was on the YouTube chat yesterday, and you've gotten this before. It's not new, but
Right.
Someone was making comments like, why don't we get to see you trade? How do we know anything? We need to see you trade. And, it's
because it's the preparation, right?
Yeah.
It's not the trade. It's not the execution.
And
I don't have the terminal in front of me because you're imagining that somebody is sitting doing exactly the same thing you're doing, right? I want to see you make this work, what I'm doing. But that's in your imagination because that's what you're limited to.
Yeah. And we don't do this show to promote Dimitri or myself or anyone else and their trading. We do this strictly to show how the Market Chameleon can be used and the tools available and to answer chameleon questions about the tools.
Right.
It's like Mike Bloomberg had a lot of processes he used to execute trades and do research and created the Bloomberg terminal to sell, and to help other investors, right?
Right.
That's what Market Chameleon, and we've added a lot of tools on Market Chameleon that we never thought about, right? Relative to based on other people's inputs using the data we have. So it's all about the tool, and we're just on in the mornings to try to help people and answer questions about the Market Chameleon. Well, it was never set up to be like, come watch Dimitri trade and talk about blinking numbers. That's never what it was set up for. So, anyways, there you go.
Right. All right. Well, guys, thanks a lot for thanks for joining us. Thank you for all the questions. Stay safe out there. Have a great trading day. Have a great extended weekend.
Yeah, no, it's my favorite weekend of the year. It happens to be my birthday weekend, so it's always a nice weekend. Is Memorial Day. It always feels like the start of summer. I love the parade. It's a good weekend.
Right. All right. Thanks, everyone.
All right, D. Great. Have a great weekend, everyone. Enjoy your